The price of oil just plummeted from over $100 to $94 following the ceasefire news. But don't start celebrating at the pump just yet. Some economists are warning this isn't a recovery. It's the calm before a catastrophic economic storm that could wipe out your savings. When the ceasefire was finally inked, Brent crude oil prices basically took a nosedive, sliding from a high of $110 per barrel down to the mid-90s. The immediate reason is simple. The fear premium evaporated. The market was terrified of a total shutdown of the Strait of Hormuz, which is the world's most critical artery for global oil transport. If that choke point closes, the global economy hits a brick wall. This drop in prices felt like a collective sigh of relief for trucking and shipping industries that have been suffocating under fuel surcharges. But here's the reality check. While on-highway diesel prices saw a quick dip, experts are saying this relief is paper-thin. Real, sustained drops in energy costs require full, long-term conflict resolution, which most analysts predict could take many months or even years to actually stabilize. Right now, we are living in a period of artificial calm. Navigating this kind of economic volatility is exhausting, and it's why staying focused on your personal progress is more important than ever. If you want to stop feeling like a victim of the news cycle, check out lifepoints.ai, a platform that helps you celebrate life's little achievements on the road to improving your life in big ways. You can track progress toward goals like making more money or improving your health, logging every small win to earn points and stay motivated with a community that cheers you on via local leaderboards. Check it out in the link below and start making your life feel a little less pointless through the power of consistent habit tracking. Moving back to the macro picture, the long-term outlook is actually pretty terrifying for anyone holding a long-term investment. Financial markets are currently reacting way faster than the physical supply chains can keep up with. We're seeing a massive imbalance. Even with a ceasefire, the vulnerability of global choke points hasn't changed, and the supply chain disruptions are still causing a massive ripple effect in transportation costs. When shipping becomes unpredictable or dangerous, suppliers have to adjust their prices upwards to cover the risk. This leads to a persistent inflationary drag that can outstay the actual conflict. In emerging markets, this is even worse. We're already seeing currency depreciation where import-dependent nations are watching their money lose value against the dollar simply because oil prices remain stubbornly high compared to historical averages. It's a stagflation trap waiting to spring. So, what happens if this ceasefire doesn't hold? Experts have mapped out a few nightmare scenarios. If shipping disruptions continue or escalate despite the peace talks, we are looking at a scenario where oil stays above $100 per barrel for an extended period. That is the magic number that triggers a global growth drag. For advanced economies, it means a significant risk of stagflation, where prices go up but the economy doesn't grow. For developing nations, it's a recipe for a full-blown currency crisis and capital outflows. Companies are already forced to make hard decisions about earnings and operational costs based on these volatile numbers. While the immediate price drop offers a momentary respite for your wallet at the gas station, the underlying structural issues, like the fragility of the Strait of Hormuz, mean we are one bad tweet or one broken promise away from another massive spike. The ceasefire bought us time, but it didn't solve the underlying energy crisis or the fragility of our global supply chains. Are we looking at a new era of stability, or is this just the eye of the hurricane before a massive price surge? It's a fine line between relief and a trap that could crush the global economy. What do you think? Are you feeling the relief at the pump, or are you bracing for the next spike? Let us know in the comments.